Welcome to the Hilltopper, the premier newsletter created by SMU Cox School of Business MBA students passionate about finance, capital markets, and investment strategies. Here, we bring you a fresh perspective on the latest trends, deep dive analyses, and actionable insights designed to help you navigate today's complex financial landscape. As future leaders in the finance industry, we blend academic rigor with real-world experience, ensuring each episode delivers valuable content, whether you're a seasoned professional or just starting your journey in the world of finance. We cover everything from macroeconomic developments shaping global markets to engaging conversations with some of the most interesting people in finance. So, if you're looking to stay ahead in the ever-evolving world of finance, you're in the right place.
Welcome. My name is William Nolan from the Hilltopper newsletter. I have with me today my co-hosts for the day, Stephen Jones, Jeremy Small, and Aston Toms. Today we have an esteemed guest, often regarded as the most interesting man in the world, and after doing some extensive research, I'm inclined to agree with the assessment. Our guest has achieved the Explorer's Grand Slam, having reached both the North and South Poles, as well as having climbed the 7 summits. He is also the first person to visit the deepest points in all 5 oceans, discovering over 50 new species along the way. Most recently, he had the extraordinary opportunity to be on Blue Origin's Flight 21 in space. However, this is just a small snippet of his accolades, and I would probably need an entire episode to detail the entirety of his achievements. However, his achievements are not confined to the world of exploration and scientific advancement. He's also the co-founder of private equity firm Insight Equity, and is now spearheading his latest venture, Cowden Capital. Mr. Victor Vescovo, we welcome you to the Hilltopper newsletter.
Thank you very much for having me. Thanks. Appreciate the invitation.
Perfect. Well, Victor, hello.
Hello.
Will gave a very great detailed explanation of the most interesting man. But could you just walk us through your career on a higher, maybe a more professional level?
Sure. I was very fortunate. I grew up here in Dallas, Texas, went to St. Mark's. I was fortunate enough to go to Stanford undergrad, and after that I did some stints at management consulting at Bain & Company, and then also as an M&A investment banker at Lehman Brothers for a while. After that, went to, before that I went to MIT and got a master's in operations research, and post the finance stint in New York and Saudi Arabia, of all places, I got my MBA at Harvard, and then went back into consulting at Bain here in Dallas when they had just recently opened their office. So that gave me a really good bedrock of experience in business, both on the financial side as well as industrial analysis side on consulting. And after about 5 years of that, the co-head of the Dallas office of Bain, he asked me to join a startup private equity company called Insight Equity. And so I was his co-founder with that. We did that for over 20 years, raised several billion of capital. We did reasonably well. And that has allowed me the ability to pursue some of the other interests that Bill was kind enough to mention earlier. And now I have my own personal family office and make venture capital as well as private equity investments and things that I'm most interested in. And that has been more the professional side. I also was a Navy Reserve officer for 20 years in intelligence, and therefore a lot of my focus in a lot of different PE investments have been more defense, aerospace, and electronics, which I continue to this day. But I have a lot of other varied interests, including life sciences, oil and gas, and many other areas. And I continue my exploration activities. So, yeah, it's been fun, and I try to keep busy.
Fantastic.
Yeah, with Insight Equity, how did the idea come to fruition, and how did your responsibilities change when you took that new task on?
Sure. Back in the year 2000, when the firm was founded, I think it was still not exactly early days, but the early maturation phase of private equity. So there was still a lot of capital that could be deployed, and there was a reasonable amount of targets, and the returns were still quite attractive, 20+%, even for industrial type private equity. I think competition has become more intense now, and I think that there are some issues in the industry in terms of deploying capital and getting it back out. But it was an amazing experience to be in private equity investing in the early thousands, and doing operational type turnarounds when you can really get pretty solid returns. Our highest returning asset actually was in excess of 10x, and you just can't do that often. In fact, the very first investment that we made, which is, if you're going to have a successful investment, make it your first one. That one was over a 23x, and it was in oil and gas. So that kind of set us up for success when you have a really strong success quite early.
With the ebbs and the flows. one thing you did touch on with the Navy Reserve, and we did listen to your 2019 commencement speech that you shared at St. Mark's.
Yeah.
And the fifth of your 25 things was just serving your country. Mm-hmm. And I know you mentioned you were in the reserve during 9/11, but before all of that happened, what inspired you to join the reserve?
Well, first I'll remark that in typical St. Mark's fashion, I wrote that speech the night before, and it actually went quite well. So sometimes under pressure, you do some good work. I joined the Navy Reserve actually in an unusual way. I was at Stanford, and one of my professors in national security was actually Condoleezza Rice. She was teaching there at the time. She had not yet become Secretary of State, but obviously an incredibly impressive woman, and I was fortunate enough to have office hours with her. And I was debating at the time when I was 21 years old whether I wanted to go full-on active duty or go into business. And she talked me through it and said, well, you could actually do both. I'm like, well, how is that possible? She said, well, you could get a reserve commission, and do some time on the side, and if there's a serious conflict, they might mobilize you. Otherwise, you can continue your interest in business. I went, okay, that sounds kind of interesting. So I put the idea in my head. I never really acted on it because I got busy with other things. I started getting into mountain climbing and all these other endeavors. And then in my first year of business school, I have some language capabilities. I did this work at MIT that was very defense-focused. I got a call from the Navy, and they said, we have an unusual program. It's called a direct commission program for people with your skill level. We'd like to know if you'd like a direct commission into the Navy Reserves. I said, okay, well, that sounds great, based on what Professor Rice had told me at the time, that it'd be a good mixture of the two endeavors. And so, I got a commission, and I was trained as an intelligence officer. The first 10 years, I was a targeting officer. I was in the Kosovo conflict. I served on the USS Nimitz. I taught at Naval Strike Warfare Center on the intelligence side, also known as Top Gun. And then after 9/11, one of my languages is Arabic. So I got a call that night saying I was going to be deployed for at least a year, probably 2. And I went away for quite a while. And I was cross-trained into counterterrorism. So I did that for the last 10 years of my career. So that was my Navy career. I probably did a full-on active duty time of about 3 years when you add it all up.
So a great mentor, and then obviously skills that were able to be bridged and used for the Navy.
Yeah.
Everyone definitely benefited there.
Yeah, and it was a fascinating career, especially working in intelligence, especially at the middle level, where you have access to raw intelligence, but you're also processing it into guidance for senior commanders, because sometimes you really learn that being able to shape intelligence, what to leave in, what to leave out, will actually guide the decisions. It teaches you a lot about bureaucracies, how they function, and how decisions are made, especially under intense pressure like we were in a couple of active conflicts.
Fantastic.
Yeah, so can you maybe talk about how your experience in the military sort of, and in your adventures, how that sort of translates into success in business?
Yeah, I've actually given talks about this, and the general thing that I say is that they all rhyme. At the end of the day, if you're undertaking any endeavor, whether it be military operation, an extremely difficult expedition in the mountains or the ocean, or you're starting a new business or operating one, first you gather the intelligence. What we call in the military the intelligence preparation of the battlefield. What are all the factors that can affect that thing that you're doing? Understand it as best you can. Talk to experts. Reduce the risk. Then develop a plan. Even though you're almost certainly not going to follow that plan to the T, it gives you a framework with which to operate and see what you're missing and what what you have going for you. And then as things develop, constant adaptation. And that's the best mixture, is having a good plan, but also adapting it to the circumstance. That's what warfare really is. But it's also business, very similar, as well as expeditions, especially when the weather changes. And then being able to know when to quit, when to, cash in your chips, not take things too far. And most of all, how do you mitigate risk? If there's one reason I'm still sitting here, it's because I think I've been well trained in terms of trying to identify risks and then mitigating them as much as possible while still being successful, and absolutely knowing when it's not working and when to stop and to try again later or to abandon it completely. You cannot be afraid of failure, because if you push things too far, you literally can end up dead. And in business, you just lose a lot of money. But if you start doing other more adventurous things, the stakes get really high really quickly. So in some respects, you want to live life like a really, really good stunt person. where you do pretty risky, dangerous things, but you do them in such a way that you've mitigated as much risk as is possible, and then you make it look easy, and you're able to do extraordinary things that very few people can do.
Amazing. So, I mean, with having been around some of those intelligent, most influential people through your career path, what qualities do you think you prioritize when evaluating an operator in the field of private equity?
I was interviewed by Brian Gumbel once, and he accused me of being like a Vulcan. Other people had remarked on that, and maybe I come across that way. He thought it was kind of a nerdy, oblique comment about it. I actually took it as a compliment. And to answer your question, it's about being analytical. One of the first things anyone has to understand is you've got to understand and do the math. At the end of the day, virtually everything that we do, whether we realize it or not, is based on probabilities, it's on mathematics. And the biggest mistakes people make in business, personal life, on adventures or expeditions, is they go too much with their gut. Not that a little gut isn't bad. And they allow their emotions to rule them. And that can get you into serious trouble. Mathematics cuts through all that, and it shows you starkly what can work and what can't, and it challenges your assumptions. How many times have all of us, especially those in business, have looked at a spreadsheet, we're putting in the inputs, we're running the model, and it kicks out something we did not expect. It should happen somewhat regularly. And what that does is it should wake you up in terms of what is working, what isn't, how important all the different assumptions, where are the biggest sensitivities. And by understanding the whole situation based on mathematics, you can mitigate risk, understand what is happening, and make the best decision. Do the math.
All right, so I might as well move on to another question. Can you share a particularly memorable deal you worked on at Inside Equity or maybe at Caledon?
Yeah, good gracious, there have been a lot, good and bad. And it's funny, if any of you ever get involved in private equity or venture capital, you will unfortunately learn that what your investors want to talk most about are the ones that don't work by a factor of about 7-to-1 in time commitment. So I remember the bad ones really well. Some of the lessons are so varied, but if I try and distill them down into some general ones, Porter's Five Forces is a wonderful tool. I use it all the time. There are variances with different industries, but understanding suppliers, customers, new entrants, substitutions, and the most important one, competitive rivalry, you have to understand that if you're going to be in any way successful in business. You need to translate that, as I mentioned beforehand, into mathematics, and never be afraid to say you're wrong. And for God's sake, if you learn more information that may be different than what you originally came up with, change your mind. It's not a bad thing to change your mind. When I get new information and it changes what I know, I change my mind. What do you do? Do you stubbornly refuse? It's good to be stubborn once in a while with having conviction. But all too many times people have too much conviction and they will ride a bad horse all the way down. This came up, actually, I'm diverging a little bit, but I'm involved in a public way against deep sea mining, the seafloor. And I was brought into it by a bunch of environmentalists who said, this is terrible, it shouldn't be done. And I said, look, I'm not an environmentalist, I'm not an activist, but actually it doesn't make sense financially, as far as I'm concerned, for all these reasons. It doesn't make sense technologically. It doesn't make sense technically in terms of how you get it, kind of the five forces thing. Mm-hmm. So I said, I'll tell you what, I'll help you out on the non-environmental things that you guys are completely focused on. And what has been fascinating is that so many people, because it's not doing well, we haven't started mining the seafloor, which is great, which is the companies that are doing that, technology has moved on. It's basically a solution for a problem that existed 10 years ago. And yet, whether it's WeWork, Pets.com, Webvan, all these other companies that literally burned hundreds of millions of dollars, if not billions, founders, owners, CEOs of startups are not one day going to wake up and go, oh, you know what, you're right. We're wrong. The world's changed. We're going to go do something else. No. They will ride that thing down until they are out of cash. And so you have to be wary of that. You must be willing to challenge your own assumptions and constantly readjust and cut bait when it's time to cut bait. God knows I wish I had done that on a couple of my bad investments. But you get that sunk cost fallacy and you just want to save a bad situation. But no, cut your losses early if you can and ride your winners. Number one rule of trading and finance, and so few people actually do it.
I'll take the next one if that's all right. You told us a little bit about where your family office now is focusing a lot of its investments. Are there certain sectors that you find particularly challenging or that you want to avoid for any number of reasons?
Avoid anything that lives or grows. I've learned that the hard way. The worst investment I ever made was actually in a nursery company. It was a troubled situation. We bought it for a song, but sometimes things are very cheap to buy because they're actually not worth very much. And I learned that in spades. Plus, everything went wrong on that investment. But when you're dependent on the weather, you're dependent on live goods and that kind of thing, there are just too many things that can go wrong. There's also a funny situation where at Insight Equity, when we started, several of us had worked on the Continental Airlines turnaround in the 1990s, which was a 3 or 4X for the Texas Pacific Group, which was a great outcome, but we all swore off ever working in an airline again. Because if you just line up all the factors that could go wrong, there are so many. And it's almost like you have to build a house of cards for it to go right. You don't want to invest or be in companies where so many things have to go right for it to be successful. You want to be in the opposite. That's why I love oil and gas. It's a mature industry. People in it are smart. They know the rules of the game. It's relatively predictable. And so if you get a good price on something in oil and gas, it's probably a good deal, depending on circumstances, that kind of thing. So, look at your investments and, again, cut your losses if you really can. But again, the rest of your question was?
I think that, that covered most of
it. What do I focus on in Caladan?
Particularly challenging. You told us what you focus on. Right. We're able to share some ones that you might look to avoid for those reasons.
What's been interesting, one reason I left Insight Equity is that that's a fund-based private equity model. And there are a lot of rules and regulations when you do that now, especially now. SEC reporting, you're dealing with limited partners that are constantly asking for information, which is fine. If you don't have a lot of net worth, private equity and venture capital is great. Because when you're getting carried interest, you can make millions of dollars if you're successful. It's great. Once you have a significant amount of net worth, you see more and more people going family office. Why? There's no time horizon. You're not really reporting to any investors. It's all on you. And you get to invest in things that you can find interesting, but not necessarily the most profitable. And that's kind of where I am now, where I'm 58 years old. If I'm going to be putting a lot of time into investments, I want to be not just investing in things that I think can do well, but also things that I personally think can move the needle forward in terms of advancing human technology. You see that over and over again with more and more people, like your Elon Musks or your Peter Thiels or others. And that's what I'm doing. I'm CEO of a biotech startup. I didn't know anything about biotech 5 years ago, but I saw an opportunity to advance some technologies I thought were very important, so I took it on. I'm now involved in an investment in asteroid mining, of all things.
Astroforge, right?
I'm sorry, Astroforge, yeah, because I believe that we may not be the ones that are able to execute on that opportunity, but someone is. And when they do, it will be transformational. They say the first trillionaire is going to be the guy that figures out, or gal, figures out asteroid mining. I kind of believe it. But then there are other things as well. I'm involved in a company that's doing robotic shipbuilding for the Navy, cutting edge technology. That's something I believe in. And so, yeah, there are things you have to be careful of. You don't want to get emotionally attached to investment. You have to be very analytical about it. But if you can combine the two, that's a great way to spend, the last, 10 or 20 years of your investing career, is actually trying to do things that are better for the planet or, other things that you're passionate about, like the Navy for me, or space exploration.
Resurrecting the woolly mammoth.
Oh, and then there's Colossal Biosciences from right here in Dallas. That is an investment I've made. I'm on the board of advisors as well, where we're trying to de-extinct mammalian species. And this is not Jurassic Park. We can't bring back dinosaurs. That's a little too far back there. These are animals that have been extincted for 20 or 50,000 years at most, usually because mankind destroyed them, like the dodo bird or the Tasmanian tiger or the woolly mammoth. And that's something that I also think is something that humankind needs in its toolbox. So maybe we don't make any money at all. Maybe we blow it all. But at the end of the day, we will. Sorry, Ben, I know you're the CEO. We're going to make tons of money. I get it, if you're listening. But that's something that I think that we will advance the technology. We already have. The number of technologies that you need to bring to bear to de-extinct a species, from DNA analysis, DNA repair, artificial wombs, animal husbandry for extinct species, all these things put together Those are great tools for human beings. One day, we'll see where it leads. But no velociraptors running around North Park Mall.
So the private equity asset class has grown tremendously over the last couple of years. Where do you see the future of the industry heading? When you first founded Insight Equity, the PE industry was around $97.7 billion, and now it's close to $800 billion.
Yeah. It's going through a lot of changes. I remember in the early days, back in the 1990s, when I was a consultant for private equity firms like Texas Pacific Group and some others, Carlyle, that it was rare for private equity firms to sell firms to another private equity firm. It was always to a strategic or you go IPO. That was considered strange. Now it's normal. And it's because there were such great returns for so long. So much money has flown into the field. And just like every industry, you attract new entrants and margins start to go down, competitive rivalry heats up. And I think for a long time, people thought, oh, well, private equity is different. No, it's not. No industry is different. They all have different characteristics, but they all go through that cycle of the early excitement stage, maturation, then a little bit of a topping out, and then, in some respects, a decline or an adjustment, and then a shakeout. You're seeing that happen in venture capital as well, where a lot of companies are not returning capital to investors. So there has to be a little bit of a development. I think that if you're really, really big in private equity, where you have multi-billion-dollar funds, that has its own advantages. You can do deals no one else can do. And so you're able to extract returns because of that capability. And then to the other end of the scale, you can have boutique firms that have extremely specialized knowledge, like in healthcare or electronics, that literally your average generalist won't understand and will invest in things that are inappropriate, or they won't identify the good ones. So just like any industry, you'll get niche players that are successful, but you'll also end up with a bulk in the middle that are going to get average or substandard returns, and you're starting to see that. I'm on the investment committee for St. Mark's here, and it is fascinating just to try and figure out which private equity and venture capital firms are potentially going to outperform their peers. And it's really hard because so much of investing depends on the individuals. I've been doing private equity for 30 years, and I've made tons of hiring and firing decisions, C-level guys and gals. Well over 200 probably. I still give myself only a 50-50 chance of getting it right. Of all the C-level executives I've ever had a direct input in hiring, 25% met or exceeded expectations. 25%. 25% failed miserably. And 50% did okay. Strengths, weaknesses, that kind of thing. And that's with all of that experience. It's because human beings are incredibly variable. And if they get into my office, they have a certain level of capability and talent and experience that make them believable. And so you just don't know until you put them in that unique circumstance and see how they perform.
Interesting. How do you approach leading some of the management teams or CEOs that you have investments with or are part of the companies, your portfolio companies?
It's the old GE style. It's metrics. Numbers don't really lie. And you can dance around this or that, market analysis or whatever. But at the end of the day, it comes down to cash flow. That's why at Insight Equity, every month, not every quarter, every month we would meet with our management teams and we called them cash creation days, because cash flow doesn't lie. Money comes in, money comes out. You can play all sorts of games with accounting about net income and all that, but if you're not generating more cash than you're burning, or burning it for darn good reasons, something is not fully right. If your working capital is exploding and you're not seeing a good cash on cash return, that's a problem. And so therefore, you have to metric them and have good plans, manage them. What are you doing? What are you looking ahead for? Where are you making investments? What are you going to be cutting? All that sort of thing. And pretty quickly, it becomes apparent that if something is going wrong for a month, that's fine. If something goes wrong on some key metrics for 2 months, now you're going to cock your eyebrow and look at that closely. 3 or 4 times in a row, something's on a downward trend. Well, now you know that something needs to be addressed. If you handle a company quarter to quarter, it'll happen so quickly you may not be able to recover from it. Weekly meetings are ridiculous. Yeah, that's just noise. So monthly or bi-monthly seems to be the best frequency for checking in with senior management and holding them to metrics and understanding what's going on. It's not about blame, identification. It's really about what is happening with the business, because things happen in business. Industries go sideways and the company, for all of its great intentions, can't succeed, but then you have to adjust. But going quarter to quarter, or God forbid, once every 6 months, you're way behind. As we say, being a pilot, you're way behind the airplane. You never want to fly an aircraft or any vehicle where you are reactive to the situation. You want to be 5 or 10 minutes ahead of any airplane that you're flying. Otherwise, you're going to screw up. Same thing running a business. You want to be slightly ahead of it.
So what would you say are, you talked about sort of 25% of CEOs sort of exceeding expectations, but what would you say are the traits that stick out to you in terms of future success, or maybe things that you've noticed early on?
First off, I'll say, being a CEO, everyone seems to aspire to want to do that. I don't want to do it. I've done it 3 times as interim CEO. I never want to do it again. It's a really, really hard job. You have to do, in a way, or oversee everything. Strategy, operations, human resources, investor relations, communications, hiring. Task after task after task, in a way, ends up at your doorstep. Best job actually is chairman, because you don't actually have to do that much except watch the CEO and manage the board and think long term. That's actually the best job, especially if you have a large equity stake, which gives you some credibility. But in terms of what are the key success factors for a CEO, and it's great. I've had some great CEOs that have worked at some of our portfolio companies, and I've had some terrible ones. The best ones are, first and foremost, decisive. First thing they teach you in the military, right, especially as an officer, is make a bloody decision. Whether it's right, wrong, or indifferent, make a decision. Now, that doesn't mean you just, shoot off the cuff all the time. You make a good decision based on information with a reasonable amount of time, but then you make the decision. And it's usually pretty rough in terms of, violent execution of a plan is better than the perfect plan 6 months later. Cost cutting, number one. One of my mentors way back in the day, who did one of my first private equity deals, he taught me, he said, Victor, you know what the number one job of a CEO is? No, I'll tell you what. Number 1, number 2, number 3 job of a CEO. What are they? And I was kind of stumbling a bit. I'll tell you what they are. Number 1, cost management. Number 2, cost management. Number 3, cost management. A bit extreme, but he's not too far off the mark. His point being is that you can generate all the revenue you want. You can have the most perfect strategy. But if your costs exceed your revenue, you're going to die as a business. And it's too easy to get really loose with cost control. One of the most disturbing events I ever had happen to me was when I was in San Francisco in 1999 during the first internet boom. And I was a head of product development for military.com, and we were developing a website. And the CEO, who was Harvard Business School guy, former Navy officer, great guy, we got a big slug of investment capital from our venture capitalists. And literally the word came down saying, basically, spend it as fast as possible to dominate your space. Basically, you are not resource constrained. Write the checks, do whatever you have to do, get big, get fast, spend the money. And that just blew my mind. And we did okay, but the amount of waste was extraordinary. And you never want to be in that position. You have to be a ruthless manager of costs. That's why my favorite type of CEOs are engineering types that actually are pretty good in managing organizations and working with people. That's why I think a lot of oil and gas companies are successful, because that's how they operate. They're numerically operational, and the people in management are more or less pretty good at working with people. And I think that's why a lot of companies that are marketing focused, quite frankly, I am extremely suspicious of. Show me a vision-oriented, very loquacious CEO with big ideas. I will not hire that person. It's just too risky. Maybe they'll be successful somewhere else, but not with me. I've just had too many failures of people that are like that. Give me a hardcore number cruncher. It's quiet, not all about, me. Those are the guys I want, and gals, in the senior positions running companies.
So are there any instances in which you see PE involvement not necessarily being the best capital solution?
Absolutely. Yeah, PE has a lot of limitations. They are on a specific time frame. They have to get money out, and then they've got to bring it back with a return. And that's one of the most frustrating things, is you end up doing things you normally wouldn't do if you had a little bit more of a time buffer. That's why private equity in the family office environment is great, because there is no time horizon. You can invest for 10 years. You can invest in 20. In some respects, people look at Warren Buffett as one of the greatest investors of all time. Well, one of the major reasons why Warren Buffett is so successful, he's old. And his first series of investments, like in insurance, were very successful. If you actually deconstruct his investment returns over time, they haven't been that great. Not really over the last 10 or 30 years. He's had a couple of good investments, but also some that are, reasonably okay. But mainly compounding interest is, as Einstein pointed out, the most powerful force in the universe. The second, my own corollary to that, the second most powerful force in the universe is confirmation bias. The human being's implicit desire and need to accept information that confirms what we already believe instinctively. So anyway, that's a quick aside.
Answered it perfectly.
Okay.
We all want to live in an echo chamber.
The best investors I know are people that are ruthless about questioning their own biases and trying to get them out. You just saw this with the recent election. I'm not going political. I'm going to talk about polling. If you really want to hear about that topic and confirmation bias and just how pervasive it is and how impactful it can be, the polls of the last election are fascinating to watch the history. Everyone's trying to rewrite history now, what happened, kind of revisionist. But whenever you're doing polling, and I was a political science major, you have to make assumptions. People think, oh, if you get a random sample, this, that, and the other, law statistics say it'll be accurate with this plus or minus this certain amount of error. That's not true. A part of it is true. But if you do a sample of 1,000 people that you raise on the phone, and 75% are Democrat and 25% are Republican, how do you actually weight that sample to be representative of the general population? It is a subjective decision how to weight the information you get. And there's an incredible pull to make any polling that people do conform to what they think is the truth. And that's what you saw happen this last election. And that's why the election results often, not just this last election, but in history, deviate from the reality. And that's a really good example of it. But that happens in business all the time too. When your teams are out there doing due diligence and you haven't done a deal in a couple of years and you really need to do a deal, and people kind of know that and they're doing an industry analysis, do you think there'll be a positive bias or a negative bias? Everything is contextual, and people get rewarded on what their expectations are. And you're not going to get rewarded in private equity by killing every deal that comes in. You're also not going to get rewarded if you approve every deal that comes in. But there are pressures at the margin, and you have to be careful of them.
I love the insight to data, because everyone likes to put data for where it benefits them, right? Like you said, polling and stuff. And my favorite part about everything with polling was, I don't know if you saw, there's you can put bids on the polling, so you're putting your money where your mouth is,
right,
to get more accurate polling. And I thought that was, for me, I didn't hear about that in previous pollings until this year, and I was like, okay, where's the money?
Right.
And then you're not as shocked by the data.
Right.
There's money-backed data.
Right. The prediction markets have done historically in the last 10 years the best job of anything. And it's because people are putting their money where their mouth is, and it's just like the free market. That's why we believe in the stock market and why stock markets have worked for hundreds of years, because they amass all the noise in the world and congeal it into an average perception of where things are. And they can change, but it's not just like a couple of people deciding, oh, we think this is what's going on.
This is who answered the phone today.
Right. And that gets to a larger issue on the value of experts. There's a fundamental question everyone should always ask themselves, which is, when you're looking at a difficult problem and what the right answer is for this, that, or the other, would you trust one so-called expert with all the right pedigree, or would you choose 100 random people on what they think the right answer is? Democracy and the free markets are based on the latter. And in general, they work better than the former. Because with the former, there's such a huge distribution of whether you get the right expert or the wrong one, or someone that's way off the reservation, there's a higher uncertainty level. So it's just a fascinating thing for me as I've gone through my career of just trying to analyze it. That's why I believe more in the wisdom of crowds than I do single individual experts. I've been really well educated, and I am incredibly suspicious and in some respects dismissive of so-called experts, because sometimes they have no idea what they're talking about. I forget the name of the rule, but someone once said, the degree to which someone believes they are an expert about anything is directly proportional to their expertise in a single discipline. A simpler way of saying that is like a Nobel laureate in economics will opine about, life sciences or chemistry, and they have no idea what they're talking about. But because they're a Nobel laureate in this one field, they think they're brilliant in other ones as well, but they're not. Where a normal person will usually just rely on common sense, and that's often the right answer.
It's Occam's razor.
Occam's razor, a brilliant concept, which is the simplest explanation is usually the right one. And then there's the corollary to Occam's razor, which is if anything can ever be attributed to conspiracy or human stupidity, 99.9% of the time it will be from human stupidity. I've been involved in so many things, in business, in the military, in the intelligence field, in actual wars where we're bombing things, and all these other things. Have I ever seen a conspiracy in quotation marks? No. And even this, on one of my most recent marine expeditions, I was given 3 subsurface targets where people that are really into unidentified aerial phenomenon, as they're now known, said, there's some strange things going on over the ocean in these areas, and there's some weird things on sonar. Can you take a look at them, whatever? And I said, sure. I had the only assets capable of doing so. So yeah, in 3 different locations, we put down landers, we looked at the seafloor, nothing, rocks, okay? Again, confirmation bias and conspiracies, I just don't, no.
I love taking it head on. Okay, I'll go there.
Yeah.
I'll
Right.
give you what's up.
Yeah. Well, now that I said, we went there and we didn't find anything, the people that are the true believers think I'm lying too. It's like, that makes them even more convinced. Well, Victor's now on and on. And it's like, no, I know. The more you deny it, the more they believe it. It's ridiculous. So you just have to ignore it.
Fantastic. So how do you view the role of independent sponsors?
Independent sponsors are great because they are more arms and legs out there in the field looking for good opportunities, and they're typically very, very hungry. The issue is that, they can come across as rather desperate to do a deal, and very often they way overplay their hands. At the end of the day, having a deal is great, but the people that make the rules are the ones that have the capital. And, if you want to get a deal done, if you try and drive too hard a bargain, it's not going to happen. We have a lot of other deals that we're looking at. And I have walked away from plenty of deals where someone was asking for 2% management fee, 30% carried interest and all this stuff. I say, that's just too much. My math doesn't work. And you've never done this before, or you've maybe done it once before. What are you actually going to add to the equation? What's your operational capability? You're asking for extraordinary economics on something that, you might be able to negotiate, 1% fee and 15% carried interest. You got to be flexible, because if you're in this game, especially when you're young, get a deal. And for God's sake, make sure it's a good deal. If your first deal fails, it is really hard to recover from that. And if you fail twice, choose another career. You can't recover from 2 failures. So choosing your first deal is critical, and I can't stress this enough for the new people going into private equity and independent sponsorships. Far more important than the economics is doing a deal and making sure it's really successful for the investors. If you barely scrape by on that first deal, it's still worth it, because you're establishing your cred that you can do a deal and you can make it successful for investors. Now, ideally, you want it all the ways, right? You want good economics, you want it to be successful, and you want to make a couple of million off it. Absolutely. But too many people try and play too hard a role, thinking that it's all about, I found a deal, it's mine, and, I need these economics and I can go somewhere else. It's a hell of a lot harder to raise capital than people think it is.
Speaking of which, so we're seeing increased fund-to-fund transactions. Do you think this is a response to regulation of public markets, more of a pool, or a capital availability push, if you will?
I'm sorry, fund to funds.
Like a fund-to-fund transactions.
Yeah. Fund to fund. Yeah, that's fine. Yeah, I think at the end of the day, it's just because there's so much capital in the private equity and venture capital community, and there are fewer and fewer targets. Look at how many companies are publicly listed in the United States now. I think we're now down to 2/3 of what we were even just 10 or 15 years ago. So you can't go public to private anymore, and the IPO window's closed. So it's kind of private to private or to strategics. And strategics, they take forever. And please don't ever come to me saying, oh no, we have this Chinese buyer. It never happens. So, especially now. And so, yes, you will continue to see more fund-to-fund transactions, but in those cases, you're dealing with sophisticated investors. And that's what's interesting is that if you go IPO, there's almost no limit to what that company can be valued at, NVIDIA. But when you go fund to fund, there's almost a cap. Private equity and venture capital people will not, pay 20 times for something. But that can happen in the public markets because, euphoria can run wild. So that can put a cap on everybody's returns. They've got to buy it at a decent price. First rule of Warren Buffett, first buy at a good price. And also buy companies that can be run by idiots because one day it will be. He did say that, I think. But yeah, so there's no way around fund to fund, but it's going to constrain the industry even more in terms of, your potential returns. Unless and until, I hope, it becomes easier to go public, which it's actually become more difficult. But that was the real good exit path for many companies in the past.
I think the Texas stock market might help that at all?
I was really excited about not just the Texas stock market, but the setting up of a legal infrastructure in Texas similar to what they have in Delaware, but without the drift that Delaware now seems to be having towards more of a left-of-center bias. If there was a right-of-center, business-oriented legal infrastructure in Texas, I, for one, think it will do extremely well. It would also help build the ecosystem, including potential IPOs and other things in Texas that longer term I think could be of an extraordinary benefit to the country. So I'm a huge proponent of that.
Fantastic. So, I thought I wanted to hit on this one question, but naming conventions related to science fiction tend to be some theme with you. So with limiting factor being a reference to the Ian Banks Culture Series. Did Calvin Capital, did it get its name from Dune?
Absolutely it did. Of course I am. I'm a huge science fiction nerd. So yeah, if I can make a science fiction allusion to anything I'm naming, yeah, I'll do it. So Dune is one of my favorite books of all time, and Caladan is the home planet of the family Atreides, which Paul is from. So yeah. No one knew that until the movie came out, but yeah, I'll fess up to it now, of course.
And in terms of VC, is there an emerging industry you're most excited about in terms of potential growth?
There are many. Life science is extraordinary with the advances in machine learning and artificial intelligence. I think we could be making extraordinary discoveries in the future. What's happening with Elon Musk and SpaceX with the Starship, I don't think people fully appreciate what is going to happen to space economics when, not if, Starship is successful. One of my companies makes parts for the Raptor engines on the Starship, and I've seen his production plans, and they are extraordinary. And I have no doubt he will succeed in making that the platform that he desires. The cost to put a kilogram into space about 15 years ago was about $25,000 to $40,000 a kilo. With the Falcon 9 going up regularly, deploying Starlink satellites, that cost has come down to maybe $10,000 to $15,000 a kilo. A significant improvement. With Starship, it will go down to $200 to $300 per kilo. You're talking about a 2 order of magnitude cost decrease in accessing space when Starship gets up and running, because it's fully reusable and it's highly capable, all that type of thing. Just imagine what that will mean for anything going into space, with communications devices, with potential, solar panels in space, mining asteroids, deploying assets to the moon and beyond. It will be extraordinary. Just like the deployment of the railway systems in Britain and in the United States, you don't know fully the second, third, and fourth order effects of that. I certainly don't, but I know it certainly is going to be extraordinary. So there are so many really cool technological advances in life sciences, in space technology, robotics, all sorts of things that can lead places we don't even know yet. But the investors that can predict that will become extraordinarily wealthy. I'm just trying to do my little part in advancing marine technology. Not that I think that there's any money there at all, really. The whole thing about the blue economy and that people are going to make billions of dollars investing in technology in the ocean. I think it's hard because there's just not a lot other than fish that's worth a lot in the ocean, and it's a brutal environment. But more on the philanthropic side, I'm really happy to continue my investments in marine technology.
Fantastic. So I think we want to pivot towards where we're really interested in your venture exploits. Where did your desire to explore the world's extremes originate?
I think it's genetic. We talked a lot about this with doctors that were on the ships, and they think that there's a certain genetic makeup where there's a higher drive of curiosity than there is in normal people, and I think I'm at one extreme. Everything follows a normal distribution curve. So many things do, and I think one is that. And so probably the most dangerous thing my parents ever did was they gave me a bicycle when I was 6, and I just tore off all around Dallas, God help them. And that's always stayed with me. And then I climbed my first mountain when I was 21 years old, and I got bitten by that bug. And it was a great excuse to travel, sometimes to extreme places, test myself physically and mentally, and everything just built on it, where especially as you get older and older and you get a little bit more resources, you can potentially push yourself to more extreme things. And in my case, that led to going to the bottom of the oceans.
Is it the challenge that excites you?
Oh, it's everything. I've been a pilot since I was 19, so that's a physical and a mental challenge right there. It was the logistical challenge of how can you actually cross the world, ended up being like twice to go to the bottom of the ocean. The technical challenge of designing and building and then being the test pilot for the most advanced submersible ever constructed. It's all that wrapped into it of like going, we're not here on this planet very long, so why not try and push things to the limit if you can?
So I've got to ask, so you've piloted the limiting factor down to the Marianas Trench 15 times now, right?
Yeah.
Going down into depths of 16,000 PSI, how are you able to compose yourself? Like, are you able to sleep the night before these dives?
Oh, yeah. It's the night before, I'm actually just going through the process. Launching a submersible to the bottom of the Mariana Trench is a little bit like a space launch. I actually have done that. So it's about checklists. It's about preparation, planning the map. So really, you're busy. So there isn't really time to twiddle your thumbs and go, oh my gosh, I'm so scared. Not that I would be. I think flying really helped. Flying from such a young age, and flying helicopters, flying fixed wing in instrument conditions, in icing. I've done all that. So you can train yourself to containerize fears and realize that fear is useful. It helps focus you, but it absolutely should never even creep into the realm of where it's controlling your actions or, God forbid, making you panic. And so really it's pretty methodical. I slept very well. I never had a sleepless night before a dive, ever. No, I slept really, really well. And I slept even better the night after. But you just have to, over time, whether it's mountain climbing or everything else, you just become trained how to deal with fear. And
so this is a question that I'm waiting to ask you, because it's by far the most interesting thing I came up with, was since you were the first human being to dive to the bottom of all 5 oceans, as well as being the first to dive to the 3 poles of Challenger Deep. When reading this, the first thing I thought of was Scott and Amundsen.
Amundsen's my hero.
Fantastic.
Right, Scott isn't because he died, but that's a bad expedition. You got to come back.
Is there any modern day equivalents in which you found yourself pitted against another rival team to finish that expedition first?
No, that was one of the wonderful things. One reason I kept the whole 5 Deeps expedition in stealth mode was what I've learned, whether it's doing expeditions or like with my biotech company, it's in stealth mode. I don't want people pressured by artificial time horizons or public pronouncements to make decisions they wouldn't otherwise make. Because you have to give people the freedom to say, time out, this changed, we need more time to do this. And sometimes, it's never enough time, right? Give an engineer enough time and money, and God forbid what happens. You do have to constrain them, but you also don't want to be held to artificial deadlines and things like that if they're going to be harmful. And so, in that particular case, with the 5 Deeps, we had a flexible time frame, but we weren't in a race. Richard Branson originally came up with the idea of doing what he called the 5 dives. But they chose a level of technology that just wasn't going to work. It was carbon fiber. It was a quartz crystal. It just didn't work. But I took that problem and said, wait a second, there is a way to do it. But I'm going to do it quietly. I'm going to only fund it with my own money. The problem you often face with a lot of these high-risk, endeavors is that people have to raise money to do them. And if they're going to raise money, they've got to hype it. And they've got to say, well, this is what I'm going to do. Well, now they're on the hook to get it done. And it can lead to a lot of bad outcomes. That's why I funded it all 100% myself. So I had complete control. And in that other interview I referenced earlier when Brian Gumbel told me, he said, why didn't you accept government or academic money for what was obviously a scientific and technological set of breakthroughs? And I just said, I like control. Control is highly underrated. And I think the only reason we were able to do it, I was not just the person funding the expedition, writing the checks. I was, trained to analyze risks and how we should develop the craft, and I was the test pilot. That's a really tight feedback loop where you can make decisions very quickly with no committees, no second guessing, and that's why we were able to do it quickly and well.
I guess at a personal level, though, I ran out of fingers for how many jobs and projects you're working on, and then personally, just all these expeditions, how do you manage your time day to day? Are you a guy who sits down at the beginning of the week and you're like, these are my goals, or are you kind of...
No, more on a daily kind of thing. I actually did it last night. I sat down at my desk because I just came back from Japan for a while, and I let things slide a little bit. And I was, okay, in the next 2 days, before the weekend, what are my top 3 things I need to kick out and get done? I need to do this, and this other stuff can slide a little bit, that kind of thing. So on a daily basis, I have my tasks. I live and die by my to-do list. Okay. And I'm constantly rearranging it, prioritizing it. What can I outsource to someone else, this type of thing. And I just do it efficiently. I've been told I'm a terrible procrastinator.
Interesting.
I clean my inbox as much as I can. And to my earlier comment about the most important thing I try and look for in people that are running my companies is you have to be decisive. Mm-hmm. If I need to make a decision on an email that I got of this, that, and the other, I'll just make the decision, or then I'll go, okay, fine, I've got to do the 30-minute of analysis of getting to the right decision, or go, okay, I need a couple of days to do the diligence on this, okay, I'm going to reserve time for that. So it's about being disciplined. And I think I've been on the record of saying that I believe the most important virtue that a human being can have is self-discipline. If you are self-disciplined, everything else is possible. You can just point yourself in the right direction, and you will be rigorous in making sure that it happens. If you want to be kind, you will become kind because you're disciplined about it. If you want to be a good driver, you will not slack off and you'll be a good driver. But self-discipline is the base foundation for being a successful person, I believe.
Would you say you developed that discipline through St. Mark's or through your military experience?
It certainly helped because St. Mark's, in some respects, was like being, in a Jesuit monastery at times. It was academically extremely intense. It was single sex. There was no distraction from all the social dynamics that come with a co-ed school, I think. And they really pushed you, especially if you showed capability. They'd push you even further. And that was a great environment. And this isn't a big advertisement for St. Mark's, but it's for any institution, like the Special Warfare Community in the Navy, or the pilot training program in the Air Force, where if you're good, they'll heap more on you, see what you're capable of. And stepping up to that and taking those challenges and trying to be even better and risking failure, that is a key pathway to success, in my view.
Well, you kept opening those doors and kept excelling, so it helps them too, right? The better you do each time, you get to that next threshold.
Right. And then what was fascinating about the 5 Deeps expedition was that I was like, oh gosh, how am I going to staff this? I mean, I needed a whole, it was a startup in a way. It ended up having over like 100 people involved. What was fascinating about that was it was such an ambitious and such an exciting project. If I needed like the best expedition leader in the world, he wanted to be part of it. The best sea captain to launch a submersible is the same guy that did Jim Cameron's, okay? The best people in the world will want to work with you when you are doing something that is very attractive. And so, yeah, opportunities just keep presenting themselves. That's happening to me now in venture capital because of what I've done on the adventure side and all these other things. Really good venture capital people are coming to me because they want me to be associated with their project. Anybody can get money if it's a really, really good idea and a really, really good team. But they're saying, no, we'd prefer to have you because you're the kind of person we want on our board or this, that, and the other. So those opportunities keep expanding. And what was that old movie with Jim Carrey called Yes Man? Yeah. It was awesome. It was awesome because it's a great philosophy, which is unless there's a darn good reason to say no to something, say yes. Don't limit yourself, because you never know where those things are going to go. And by the way, the last thing I'll say about all that is always be courteous, always be polite, never be pejorative to anyone. There's no reason for it. You never know where they will end up or what effect they could have on your future. It is you live long enough and things start coming around to you, I swear to God. So always have a good reputation, maintain a reputation for integrity, never kick someone when they're down, be as kind as you can, as often as you can, and you never know what that will pay you back in tenfold.
It's a good reminder.
I know you have an appointment at 3, so we can...
No, it's okay. I'm good. Yeah, I'm good.
Oh, is that the famous watch?
No, this is, well, it's one of them. This is actually a watch that Omega made 50 of them, and they have a backing of the 5 Deeps logo.
Wow.
And they gave these to myself and the other members of my actual at-sea crew.
Wow.
And so, yeah, they're kind of commemorative and special, but it's not the watch that I wore on the dives, and it isn't the one that went outside. That's a really cool watch. That one went down to the bottom of the ocean 11 times outside the capsule at 16,000 PSI, and it's been to space. So it's the only timepiece that's ever done that, which is kind of cool.
Does it still work?
Absolutely, it still works. Even better, there's a quick story about that Omega made 3 prototype timepieces that would go outside the pressure capsule in the ambient environment of Challenger Deep, which is 16,000 PSI, freezing cold temperatures, corrosive salt water. And after I took all 3 down on my first dive down there, I brought them back up. I asked Omega, I'm going down again in 2 days. You want me to take them all down again? And they said, well, you can do what you want with yours, but the other 2 were good. I went, that's fine. And I think part of that was driven by the fact that on that first dive, one of the watches was actually on a robotic lander, not on my submersible. 2 of them were on my sub, 1 was on the lander. The lander got stuck on the bottom of the ocean. And I came back up and they said, "Oh, Victor, we're so sorry to tell you, but the lander, it didn't come back up. I think we're going to lose it." I went, "Oh, Jesus, that's the one that had the watch on it." and we thought about it for a while and we said, "Well, the battery's going to die. We don't know where it is, but we do have a submersible that could get to it." We're like, well, how the hell do we find it? We ended up in a situation where we actually, we worked the problem. Whenever you have any kind of situation, work the problem. That's why the movie Apollo 13 is one of my favorite. I mean, good Lord, they had so many things go wrong, but what did they do? They're engineers. They figured it out. When you get in a bad situation, work the problem. That's all you can do. And in that case, we said, well, hey, we know exactly where we dropped it from the surface. Let's get another one of the robots. We'll drop it from the surface, and it'll fall down 7 miles in the ocean. It won't drift too much. And so, okay, that one will be alive. We can track that one. So that's what we did. We dropped that lander down, and then we got in the sub, and then we went down to the bottom of the ocean, tracked to the live lander, and then we did a circular search pattern for the dead lander that had the watch on it, and we found it. And then we extended the manipulator arm and we literally shoved it until it got unstuck. And this is at the deepest point in the world. And eventually it came back up. It had been on the bottom for 2 days. When it got back on the surface, I ran over the lander. Sure enough, there was the timepiece ticking perfectly. So that holds the record. Well, there you go. But and they were my only sponsor. And it's not because I needed them. It's just because I really like their timepieces and they're really cool people. And yeah, it is now. Yeah, it is now. It wasn't at the time. I was like, oh, damn, we lost the lander and the watch. Uh-oh. Anyway.
Does anyone else have any last remarks?
I thought just one last question.
Sure.
I've listened to the commencement speech, right? So it's top of mind. You said one of the most important things is just get equity. Right?
Yes. Oh,
so
yes.
What is your advice, I guess, for people maybe I don't have equity yet? So what's your advice just to start getting small pieces of it and where to look for it and just maybe a lesson learned?
If you are ever taking a salary, you're going to be limited by how much other people want to pay you. Mm-hmm. Bonuses are great too, but it's always going to be relatively capped and you're going to get hammered by marginal tax rates. And people are going to know what you make throughout an organization. The thing about equity is when you own equity in a business, there's kind of no limit to how much it will be worth, and people don't begrudge you that. People will begrudge paying someone $1 million or $5 million over 5 years to do X, even like a sports athlete. But if you own 5% of a company and becomes worth $100 million, no one's going to cap that on you. They can't take away the excess. So equity is the key to building significant wealth. Therefore, what I was trying to tell the guys at St. Mark's was, if you're ever in a position where you can take a smaller cash compensation in exchange for equity, do so. Especially when you're young. When you're in your 20s and your 30s, even into your 40s, cut out your cash compensation and take equity. Believe in yourself, believe in the company. And if you don't, what are you doing there? You're wasting your time. But that's going to be the key to building sustainable wealth. And they always joke, your first million's the hardest. It is. That is not a fib. That is really true. Your second million is a hell of a lot easier. Your 10th, even easier. Because you end up crossing that threshold where you're consuming your capital. When you get above $1 or $2 million, you can take care of all your basic needs, and now the rest is money to invest. And if you invest it well, it's going to accelerate. And then there's that compounding interest effect. And if you can do it as early as possible, you're setting yourself up for significant wealth generation in the future. That's why Warren Buffett is so wealthy. So the other corollary to that, if you go to an employer, especially in a startup, and you say, okay, you've accepted the job, whatever, you know what, I've thought about it. Will you let me take less cash compensation in exchange for some equity? Don't even say, well, how much? Just put it on the table. Anyone worth their salt is going to go, I like this person. They believe in the firm. They believe even in me, willing to risk their cash for that. And the opposite is true. If I've ever had a CEO candidate who said, I need a little bit more cash comp for this, that, and the other, and I'll take slightly less equity,
It's a red flag for you?
huge red flag. In fact, I've rescinded offers before based on the degree to which they did that. So the opposite is also true. When someone said, you know what, I just need, the magic words to hear are someone saying, you can just pay me what I need to survive, but the rest I would like in equity. Mm-hmm. That person goes to my top 10 list, like with that statement.
No, it's really good advice.
That's how we started Inside Equity, by the way. My partner came to me. He was funding it all. He just said, what do you need to survive? I told him a pretty low number. And he said, okay. But I also got a significant amount of the business. And yeah, it worked.
No, it's good advice for us and like a good just piece of, or like something to remember. Because we're all about to re-enter the job force. Hopefully
Yeah.
In, 6-7 months. So it's always
Ooh, lucky you.
Yeah, it's always just good to have best practices ready at the front of mind.
And it's hard because cash comp is great. You can do a lot of things with it. You can go to Starbucks. You can go on vacations. You can, spend on this and this. But if you can, live with a car that's 10 years old. I still drive a car that's 20 years old. It's out there in the parking lot, right? Not that I need to, but I'm just used to living that way. Believe it or not, I actually live somewhat frugally. I conserve my capital to do major things, investments or expenditures, but otherwise, yeah, I live somewhat frugally. And that's a great discipline. Look at Warren Buffett. Where does Warren Buffett live? He lives in this Omaha, Nebraska, in the same house he's lived in for what, 40, 50, 60 years? Right, exactly. That's a real thing. So, but if you're extravagant, a guy shows up, or gal, and they're in, custom bespoke suits, they're driving, a car a year old, it's flashy, this, that, and the other, it just screams out, this is someone that is not going to do which I told you earlier, is the number one job of a CEO. What is it? Cut costs. Someone that can't manage costs in their own life is not going to do it at my company, and it is the most important function that they have.
So we wanted to deviate at Hilltopper from the typical standard thank you practice where they just give you a bag full of swag.
Thank you.
We think that's stupid.
I appreciate that.
So what we wanted to do was connect with you more on a personal level. I did a deep dive on you as a person.
No pun intended.
Exactly, no pun intended. I know that you're a big fan of T.E. Lawrence, as well as
oh my God,
reader.
yeah.
This might be too on the nose just because I found it too perfect, but this is from my own personal collection. It's Ray Fiennes' Lawrence.
Oh my gosh!
I'm not sure if you've had the chance.
I have not.
So he essentially retells the 7 pillars of wisdom,
which is really hard to read, by the way.
Exactly, but then relates it to his experience in Scottish Greys when he was serving in Oman. And it's fantastic.
Yeah, I used to live in Saudi Arabia, and I've actually retraced the route of T.E. Lawrence. Yeah, I went all the way to Damascus as well. Yeah, I was held up by Syrian border guards, which wasn't pleasant. But anyway, but no, thank you. That is a thoughtful gift, and that actually gives a really good point. In meeting anyone for the first time, if they have some degree of capability, or you want them to help you, or this, that, and the other, do your research. Just like I said, in general, everything goes down to preparation of the battlefield with intelligence. I'll tell you a really quick story. Someone I really wanted to interview for a paper when I was at Harvard Business School was a guy named Danny Hillis, and he invented the company Thinking Machines. I really wanted to interview him for a paper I was doing on startup businesses. Impossible to get into his office and even just talk to him. So I did my research. I did a lot of research on him. And I discovered he was fascinated with fire engines, of all things. So I looked around and shopped all over the country and found an antique toy fire engine. Got it from some guy in Illinois. I wrote a very brief note just saying I would just love to talk to you for just 30 minutes about Thinking Machines. Please accept this gift. I know you have, your kids might like it as well. If you don't, whatever. Send it away. Within 3 days, I got a call back from Danny Hillis saying, I'll meet you at this time, this place, let's talk.
Amazing.
So, details are what make the world successful. And so, doing your research, understanding, deeply appreciated, and a good indication that you're on the right track.
I appreciate that. So, yes, we definitely appreciate your time. This has been incredible. Like, honestly, I can't imagine this interview going any better.
Great.
I feel like our readers and listeners are going to get quite a lot of value out of the conversation.
I hope so.
Absolutely.
Most important thing, make use of all the time that you have. We do not have a lot here. So,
Exactly.
live it right, live it well, say yes.
Fantastic.